compilation of all views across sectors as we go into the second quarter. Sanjay Parekh is founder and CIO at Sohum Asset Managers. He's with us now to take some questions. Sanjay, good to have you back on the program. Thank you for your time. I was looking at the portfolio positioning. Basically, your weight in sectors vis-a-vis benchmark weights. You're still overweight autos, staples. You're underweight IT. You're underweight. I think banks also. You're in line, right? Maybe slightly on the underweight side. If I got that right, and correct me if I'm wrong. And what's the new idea? And how are you looking at this phase of turbulence? I mean, actually, just one day, because last 3 days the market's been actually recovering. Over the weekend, we had some of this, conflict out of the Middle East, and today we are down a little bit. But how are you looking at it? Go on.
Yeah. So thank you, Prashant. So basically, we've been positive on domestic cyclicals, and on financials as well. We are neutral right now. On banks we are neutral. On the overall financials we are overweight. But domestic, the entire theme we like, the cyclical piece, the autos, the cement, as I said, the entire financial space, telecom, domestic real estate. So these are utilities. So these are the areas we are overweight. We are underweight on IT now for almost since inception, and it's a big underweight. Which we continue to, we plan to continue for a while. And we neutral on pharma. We are mild underweight on metals. And also on FMCG, we are underweight mainly because of valuation. So Sanjay, this is our positioning, and by and large, it's worked for us over the last 16 months.
When you say you plan to... Sorry, go ahead.
Yeah, please. Yeah, so on markets, Prashant, valuations, as we discussed, are not that cheap. But now, we've seen some time correction. If we take earnings, as you just highlighted, Nimesh just highlighted, around 950, 960 for 24 and 1,080 to 1,100 for 25. And let's say India has by and large got 20 times. So that would mean 21,600 over next 12 months on 25. So it's good returns from here, but a little bit 3 to 5% lower is always a possibility given the geopolitical risk, given the inflation globally is higher. Crude is volatile and on the higher side. So we will have to keep note of that. Interest rates would transmit now at higher rates. So all these factors put together, we need a little more margin of safety, but structurally we are very, very positive.
Sanjay, just coming back to that point about IT, you've been underweight on IT. You plan to stay underweight on IT for a while now. How would you define for a while? When do you think it would be the right time, or the inflection point in IT will take place?
Yeah, so Rima, essentially, basically, we buy IT, the great return ratios and ROCs, payouts are very, very good. But the main point is growth, which is missing, So we don't, and the valuations are not that cheap. So if you get the larger names, TCS at 24 times 1 year forward, or Infosys at 21 times 1 year forward for 7-8% growth for this year, clearly we are seeing uncertain times. But more importantly, we're not even clear for FY25. So if there is a hard landing, and if rates are going to remain higher for longer, as Fed is suggesting, then and inflation is sticky, then obviously we could see more effect on tech spend. And that is our worry. And then, as I said, the valuations are really not cheap. So at best, we think it will remain sideways, but we would enter at more like, some more time correction, some more clarity, and maybe 6 to 10% lower. But it's a dynamic world, so we'll be open. But right now, this is a...
All right. Hi, Sanjay. Good afternoon. It's heartening to see that you've outperformed the benchmark since your launch in May 2022. And I say it's heartening because your portfolio is more skewed towards large caps, that's 70-75%. And in spite of that, you have given returns of more than 30% in comparison to Nifty, that's around 20%. So that's good on you. But I wanted to ask you about two sectors in particular. One is on the banking names, where your weightage is more or less in line with what the benchmark is. But HDFC Bank, the weightage is relatively lower. So your view on that big daddy, because that's not moved and that's been a relative underperformer. And the other point is on consumer staples. You're underweight out there in comparison to what the benchmark is. Ahead of elections, will you look to add some weight out there, HDFC and consumer staples? Go ahead.
Yeah, Nigel, thank you. So basically, financials, we're structurally very positive. And as you see, we have all the larger banks in our portfolio. We are mild negative right now. But otherwise, the larger banks, be it Axis Bank, ICICI Bank, SBI, even HDFC Bank, we are positive. We think this is really structural. The valuations by even by historical standards are very reasonable. Earnings contribution even this quarter and this year would be very good. And at an appropriate time, we'll further move up on banking as an overweight. Overall financials, we are positive. We are overweight, led by NBFCs. And so the overall financials, we are positive. On HDFC Bank, we own it. We genuinely believe it's a very good long-term story. There were certain concerns on NIM's compression for this year and hence lower growth rate. But we feel that over the next 2 to 3 years, the combined HDFC Bank will clearly be able to get growth at an accelerated pace and get back their ROEs and return ratios also coming 25 to 27. So we obviously cannot exceed 10% in the bank because of the SEBI regulations. And at an appropriate time, clearly we'll try to get there. But I think it's a little bit overdone in HDFC Bank, and we expect it's underperformed the last 2 years, but this could be one where the rear view mirror will not help, and it is better to look ahead of the next 2 or 3 years.
Okay, got that. By the way, that's news that's known to the market. This was announced by Bajaj Finance last week. They're looking at equity fundraising. They're doing a mix of a QIP as well as this issue of warrants to the group entity, parent entity, which is Bajaj Finserv. So that 1,200 crores, known news came in yesterday, and now they're giving out the timelines and as to when the shareholder meetings will be called to execute the same thing. That's a stock in news. Sanjay, so if you were to put fresh money to work right now in this market, first of all, would you do that, or would you stagger it out? Would you hold some cash? And if you were putting that money to work, then where would it go?
Yeah, so we would be gradual, and because I'll be very honest, there are not too many good opportunities at the right valuation. So it's very important to get the right entry price. And that's a very important source of alpha for us. So getting the sector right, getting the stock within the sector right, and most importantly, getting the entry price right. I think the last one is a little tough. There are opportunities, but even in Nifty or even in mid and small cap, there are opportunities for sure, but not exactly at the comfort zone of entry price. So if we get money right now, we will be gradual in our deployment. But if the markets were to, say, react 3 to 5%, and if we get select stocks at very good levels, we'll be very aggressively deploying. Because we are structurally very positive. It's just that we believe there could be some time correction and some price correction. At the same time, if we get a stock even at today's level, where we think there's great opportunity, we are very open, provided it fulfills our valuation comfort zone. That's only.
Got that. All right, Sanjay, we'll leave it on that note. Thank you very much for joining in. You have a good rest of the day. We look forward to the next chat. All right. We'll take a break on that note.